Antonio, do you want to start?
Yes, sure.
There's one change that will be applied for the local audience that you will be on the big speaker, but I think they can hear you. Okay, thumbs are up. Okay, go ahead.
Okay, so I would like to share some slides. Can you see them?
I think they're coming up. We can see them.
Okay, great. Okay, same. So, good morning, everybody. My name is Antonio Manganelli, and I'm moderating this panel about model to support investment in network infrastructure in Europe. What is the way forward? And the panel is composed by Verena Weber from the OECD, Marit Palovirta from ETNO, and Peter Koch from DENIC. And just give you a 3-4 minutes introduction to set the scene of this debate, and just to talk very generally, just to give the as I said, to give the scene to the following speaker. So the fact that we are talking about network infrastructure is very important in the internet, of course, and digital ecosystem, because the very high capacity fixed mobile physical infrastructure are the backbone of the digital ecosystem. They support innovation because they, of course, the better infrastructure, the better services can be vehiculated, but also they are innovation because there is a lot of innovation investment in the infrastructure. Under an economic point of view, the network infrastructure exerts positive externalities in the overall economies and in the digital ecosystem, so at industry and society level. That's why in the past there were also legal monopoly. Now there are universal service obligations, which are a lot in evolution. And there are utilities and business which are very highly regulated under a competition policy point of view and consumer protection point of view, and also because of the externality and the social impact that they have also, they are also subject to industrial policy targets. So there is some target of investment in the EU that you well very known, the digital agenda first, then the digital compass at last, which sets some investment targets. And that's the same reason for which when there are some so-called market failures, because the infrastructure cannot develop in all the areas, there are some public subsidies which have been quite growing in the past years. The point of the infrastructure network, as you well know, is very high fixed cost, a huge economy of scale and density, especially in the access network. That implies that the average cost of unit, for example, for the FTTH, significantly increased for high level of FTTH coverage. So the cost of deployment increase very much as much the coverage is getting closer to 100%, which is in theory the one of the target of the industrial policy at the European level. And some to finalize the setting of the scene, some market dynamics, and in this context, economic context, we can see that the revenues in the last years in the telco markets and the market capitalization are quite decreasing, which anyway is not common for all telcos in the world. I mean, the data and the figures in Europe are much worse than in Japan, in US, and then of course compared to digital platforms, which anyway are doing other business, but of course they are actors in the same digital ecosystem. And this decreasing revenue does not depend, of course, in the decrease of demand, but depends on the decrease in prices, which is quite evident in some figures comparing the average revenue per user in Europe with Japan and USA, and also the price, more detailed price variation at European level and in some European countries in the last 10 years. And contrasting to the needs of this investment, we can see that this economic dynamics brings the average investment per capita in Europe to be lower than in other in other part of the world, as well as the ratio between capex and the revenues. And but as I said, that this dynamics in revenue does not depend on the decrease on the quantity of the service and the demand of the service provided, because there is a growing, as all we know, a growing computed average growth rate in internet traffic in the last years is increasing, even though the let's say the increasing is decreasing, but is still increasing very much. And you can see another trend is in the last, let's say, 10 years, we are looking in a medium picture here, in medium time frame, is that source of internet traffic is very much concentrated compared to previous dynamic in the traffic patterns and the traffic flows in the internet ecosystem. The last point is to some regulatory dynamics that are, and maybe we can talk later on, the speaker can talk later on the relationship between this and the market dynamics, that in Europe there is a very intense pro-competitive access regulation, which imply intense price competition from telecom industries in the internet access services. And there are, of course, in place as you will know, the first one with the electronic communication code is the legislative framework, and the net neutrality rules, which in a nutshell prohibit completely commercial discrimination and unreasonable technical discrimination. And this is framed in the open internet regulation. And we can see that this piece of regulation are quite different from what we can observe in other parts of the world, and also what we can observe in other parts of the ecosystem, like the OTTs regulation, of course, has been much more soft-handed, both in terms of pro-competitive regulation and also the approach in the competition policy, in the merger policy. Of course, now is changing a lot with the DMA going into place, but there is still some asymmetry. So I will leave the floor to the panel, and I will give the floor to, I think the right order is the Verena Weber from the OECD for the introductory remarks.
Good morning, everyone. Can you hear me well?
Yes, we can.
Yes,
Yes.
great. So just to introduce myself, for those for whom my face is not that familiar, I'm Verena Weber. I'm working at the OECD, where I'm responsible for the communication infrastructure services and policy unit. So we're looking at everything that is related to broadband statistics, telecom regulation and policy, and we're also doing country studies. So we're comparing the different parts of the world. And this is also the nice thing about the OECD, that you can talk, about the different areas. What do we see in Europe versus North America versus Asia, etc. So a couple of thoughts from our perspective. So at the OECD, we started a project on looking at investments in broadband infrastructure. We're not done yet, but I hope then for the next session that we might have in the coming year, I'll be able to show you the numbers as well. So basically, but what is important from our point is to see what is the overall objective of this. So what we can see across the OECD is, that digital transformation affects all sectors of the economy, affects the societies in our countries. And without connectivity, there's simply not such a thing as digital transformation. So like from a public policy perspective, what we need is to ensure that we get coverage that reaches everyone, that we get high quality connectivity, with the increasing use of different digital tools and technologies, such as the IoT and AI. And the third issue, and this is, I think, what we're here today for, is how do we ensure continued investments in broadband networks? So this is our starting point. So from our point of view, it's quite important to look holistically at investments in networks. And there are a couple of trends I want to mention that we see. So Antonio has mentioned, obviously, an important actors are communication operators that are, doing really the heavy lifting at this stage with regards to network investments, in particular, you know, in rather the dense areas. So basically what we're doing at the moment, and unfortunately I can't give you the results yet, we're checking the financial performance. We did a financial performance check back in 2019, where the operators had quite a good margin to do so. Now we do know, you know, that we have additional investment requirements, and if we want to bring connectivity to everywhere, maybe, you know, we have to enlarge our view. So in enlarging our view, we see, you know, that a couple of things are changing the market structure. So we see a continuous rise in tower companies. So those companies are an important player because, you know, they take some of the investment needs off from the operator towards that sector of the industry. Across the OECD, we see that they have quite a healthy growth, healthy margins. So that's a part to watch. At the same time, we do see that we have financial asset providers such as private equity that go increasingly in the market. And what is quite interesting to note is that these companies often invest more in the rural and remote areas in OECD countries. We do see this, for example, in Germany. We also see this in Colombia, Chile. So that's a trend we're seeing. Interestingly enough, that model is different because those guys are typically investing in wholesale access networks where you have competition at a retail level. So this is, you know, one additional thing to think about when we talk about how can we ensure investments by different players on the longer term. Then we obviously have, and Antonio mentioned that, the publicly listed tech companies. So what we do see is they do invest in data centers, they do invest in submarine fiber cables. So this is an additional source of investment that we're seeing there. So they're not only, push their traffic over the networks, they increasingly invest in network infrastructure as well. And finally, and this is an important point, is that we see increased investments by the public sector. So we've never seen so much money basically flowing into the deployment of broadband, especially in rural and remote areas. So think about the United States. We see 65 billion being invested in broadband in rural and remote areas. We have the recovery funds in Europe, where a lot of the money goes into infrastructure investment. So basically, setting the scene, like, my plea is just, let's look holistically at the different actors. Let's look at how these actors, can work together, and how, we make the best out of that mix to ensure long-term investment in networks. Thank you.
Thank you, Verena. Maybe we can pass the floor to Marit Virta from Etno.
Thank you, Antonio. Thank you very much. And good morning, everybody. So just to introduce myself, my name is Marit Virta, and I'm a Senior Director of Regulatory Affairs at Etno. For those of you who don't know Etno yet, so we represent the largest operators in Europe. At the moment, I think we have about 32 members. And if we look at investments, so our membership represents about 70% of all network investments in Europe. So fixed and mobile networks. So let's say the majority of network investments. And a big thank you to Antonio. I think Antonio gave a very good kind of a snapshot with some numbers on where the telco sector are. So that makes my job a little bit easier here today. And so the starting point very much from our point of view is that networks, of course, are the foundation for our digital society and economy. Having said that, and I think Antonio's numbers also back that up quite nicely. Having said that, I agree fully with Verena that we need to look at the internet ecosystem. So it is, of course, also clear that content and services are essentials. We need to use the networks, keep the networks running. And there's a whole lot of different type of content. So Antonio showed a graph. We currently have a kind of a focus. So let's say 50% of the content seem to come from a group of players, but we also have a lot of other content. We have IoT traffic, connecting devices. We have e-government services, many crucial things that, of course, run through the networks. But then looking at where we are in Europe today in terms of our connectivity infrastructure. So we are in the middle of a big transition, actually. So if you look at where were we 10 years ago, we were really still running on copper networks. We were largely on 3G, so video content was not coming through, etc., etc. In terms of policy targets, we had an EU target of 30 megabits per second just 10 years ago, which today, of course, seems rather ridiculous. So today we're really trying to take a leap towards fiber, towards 5G. And I think that also in terms of industrial policy, the EU decision makers have put us very ambitious targets. So we want everybody to be connected to fiber and 5G, or rather gigabit connectivity, let's say technology neutral, by 2030. And if we look at the numbers on where we are in terms of these targets today in Europe, about 55% of Europe is currently covered with fiber, so 55%, 73% by 5G. But this is not the real standalone 5G. This is the first generation 5G, which is partially built on 4G. So there's still quite a lot of investments to be made there. And if we look at the content, so Antonio already mentioned that we see a constant growth of content at about, well, between 20 and 30%. We did a study with Arthur D. Little lately. So they forecast about 20 to 30% data traffic increase until 2030. So this is a little bit where we are. And if we look at the investments going forward, so we believe that there are several. There is the coverage gap. So already we see that we are not where we really should be in terms of the coverage. So both 5G and fiber. And of course, in order to bridge the gap, we need some investments. We did a study with Analysis Mason earlier this year, and they forecasted that about 10% of all European citizens will not have access to gigabit connectivity by 2030 if the current rate of investment continues as it is today. We've had other estimates. So our friends at the WIC consultancy, for example, say that still 176 billion euros are needed just to have 5G for everybody. So there's a huge gap in terms of coverage. Then we have the capacity. So with this ever increasing content, and you may debate the exact rate, but it is increasing, it means also that telecom networks have to invest in capacity. So you need to redimension networks. You need to build more towers, more antennas. You need to make the networks more robust in order for the end user to have good quality content and to have a good experience. So this is a parallel investment that is all the time happening, of course. And it is very much then related to the content issue. So how much data traffic is in the networks. And then third pillar I would raise in terms of investment needs is this innovation and transition that the sector is going through at the moment. So the vision for the sector, and this is something we put forward very, I think, clearly also in the European Commission consultation that closed in mid-May, is that we see the sector moving into a fully network kind of virtualized environment where cloud will play a major role, and everything will be software defined rather than hardware defined. And we're really moving away from the legacy networks and going towards this fully digitalized space. And this is, of course, a huge opportunity. So it's normal that we want to, our members want to invest in that. But also that means that there will be more competition. We will see new players stepping in. So already we are competing with the platforms, for example. I mean, very basic example, text message versus WhatsApp. And now also in cloud in other areas, but also then vertical industries, etc., are coming into the picture. So we do see increasing competition. So those kind of things is where we see the investment challenges, if you like, for our sector. And as this session is called the models to support investment, so we need to look for solutions. So my first thoughts in that regard is that, yes, we do need, of course, different investment models. There are already many of them existing in Europe. We have things like network sharing. We have things like, well, you have seen maybe joint ventures for fiber rollout, for example, in many countries, different kinds of commercial agreements, etc. But from our point of view, this hasn't been enough. It is not enough to really ramp up the investment and make the reached targets that we have set for ourselves in Europe. We would like to do many other things in our sector. We would like to see more mergers, for example, a bit of a tricky topic to be discussing. We also are trying to promote a lot new things for the future, such as the Open RAN. So to open some of the interfaces to have the possibility to do things differently. but these are still haven't quite materialized. And the major constraints that we see here in Europe tend to be regulatory, actually. So competition policy is very strict and has been very strict, both with regards to, for example, network sharing agreements, but also, of course, with regards to mergers. We still have very heavy ex-ante regulation on pricing. So people are telling our sector, well, why don't you just increase the prices? Well, we all know consumers like low prices. That's not really a discussion topic. It's been a political choice. We also know that prices are still very much regulated. Wholesale prices are regulated. We have a very convenient roaming regime in Europe that is price regulated. We have regulated prices for international calls. We have a lot of price regulation in Europe, which means that simply operators are not allowed, are not able to increase prices. So it's very sticky in that area. And then, of course, as I said already, as competition is increasing, we need to also see, well, how is the regulation that our sector is subject to comparing with the regulation that other sectors in the ecosystem are subject to? And I'm, of course, here thinking about the platform players that have been very much part of the discussion about the investment models. And while there is some regulation, and we have now the DMA and DSA, really, this has nothing to do with the sector regulation that we have currently for our sector. And we see that there is still very much a regulatory asymmetry between the telecom operators and then other parts of the value chain. And this is then where we have concluded as European operators that we need other solutions. We need further solutions to make sure that we have the financial capacity and sustainability to invest in all the three things that I mentioned earlier: coverage, capacity, and also the innovation to make sure that this sector still exists as we look forward to the next 10 years. So I will maybe stop my initial remarks there. Thanks.
Thank you very much, Marit. And we pass it forward to Peter Koch from DENIC.
Yeah, thank you, Antonio. So let me give a short introduction of myself and why I'm sitting here. So my name is Peter Koch. I'm a policy advisor for DENIC, the German top-level domain registry, and as such would have no cards in the game, right? So I was asked to shed some light on this from the perspective of the technical community and from the internet infrastructure side, which I'm now trying to do. So first of all, as I just said, this might sound to some of you like an interesting discussion between the big telcos in Europe and the big platform, which from the European perspective also means the big US platforms. And we could all lean back and have popcorn and look what happens. Now that would be a mistake, because what is at stake is more than the interconnection between those and who wins or not wins that battle. But first of all, net neutrality, and also with that, the quality for the end user, which is supposed to grow according to what we've heard, and also according to the plans that the European Commission has launched and that have been referred to a couple of times. So what I'm trying to do is explain a bit, because I know many in the audience will know, but maybe some people don't, and some online will appreciate that. Talk a bit about what this interconnection means and what the internet actually is. And let me start with that phrase that all of you have heard. The internet is a network of networks, which means that there's no central regime for that. There's no central regime for interconnection, and there's no central policy. These networks are so-called autonomous systems that are connected to each other, which is usually following a simplistic model, and then we can expand on that. So either you are a provider, you are a customer, or you're a peer. Any two networks do choose to connect to each other or don't, but let's assume they do. Then if they are peers, they will exchange traffic, usually without money flowing. Or you're a customer, which is what you do at home. You're a customer, you probably don't have a choice to go to anybody and say, well, can we exchange traffic? No, you have to pay your internet provider. And on the other hand, that's the other perspective. So the internet provider is the one giving you quote, quote, transit, so is getting the money from you. And this also happens a level up. Smaller networks pay larger networks to take their traffic and transit it into the internet, and vice versa. Now, of course, there is also a model of so-called paid peering, where traffic exchange directly and some money flows and something is going on in the back. This is not often very transparent, but it exists and there are different regimes and we're not diving into this. Question is, where is this happening? We do have, at least in Europe, we have a well-developed system of internet exchanges where these various providers, small and large, meet and can do peering, but also can engage in transit or paid peering there. By the way, these internet exchanges are very much a European invention and a European contribution to the what we now call the internet architecture or the operations of the net. So this is the ground layer, and this is the packet pushing. And when I say packet pushing, we should keep in mind that the internet is layered. So we have cables at the lowest layer of various flavors, as we have discussed and we'll probably discuss further. And at some point we have packets that are pushed back and forth, and these are more or less independent of the services that run above them. Now, the packet pushing part is commodity, which probably could frame a bit of the expectation of revenue there, if you compare that to your water provider or something else. Now, that's the packet pushing. And then one of the paradigms on the internet is the permissionless innovation, which doesn't mean that anybody can rip you off. That's not what is meant. What is meant is that you don't need to apply for developing a new service or developing a new protocol over the internet. For as long as you speak the internet protocol, you can do that and connect to peers that speak the same protocol. And if you're lucky, you develop something very new and you spread and grow and you have done innovation. And of course, there are those that fail, but let's not talk about them. So that's the foundation of the internet, that there's permissionless innovation as well. So on technology, we have the peering and transit, we have internet exchanges, and we have heard also about like private networks, the big players not going over quote, quote, the public internet, which is not really public, it is run by the carriers. But of course, the big players running their own sea cables, having their own connections, and also having their own services pushed to the edges, which is what you've all heard about, the content delivery networks that are part of the game, but these are not cables. These are systems and data storage that is brought to the edges to reduce latency. And if we think about 5G or the next version of 5G with these interesting promises of very low latency, like millisecond ranges, this is not just by increasing speed of cables or doing more bandwidth. I mean, the laws of physics are not a social construct, right? So this is all bound by the speed of light, and that means at some point you need to shrink the distance. And that means if I want to shrink the distance to the customer, I need to push the content to the edges. And that's what CDNs do, and that's what will be increasingly necessary for these 5G promises of single-digit millisecond latencies. This is, of course, also investment, and this is what part of the ecosystem does. And we've heard the suggestion to have a holistic view, not just looking at the cable and the packet pushing, but for the services, it is important that these data are transported to the edges. And I guess with that short introduction, I can kind of leave it that way, and we give it back to Antonio.
Okay, thank you very much. Okay, thank you very much, Peter. I think it's Marit, maybe you want to say something?
No, I'm just trying to catch the attention of our lady here.
Okay, sorry.
We got offline. We don't see you anymore on the laptop. There was an error.
Okay, sorry. No, because moderating remotely is not so easy. So that's
sorry.
Okay. No. Okay, thank you very much, Peter. I think we completed the setting of the scene. And sorry, I forgot to introduce myself. My name is Antonio Manganelli, and I am professor of competition policy and regulation at the University of Rome LUMSA, and I previously worked for the Italian Ministry of Economic Development, taking care of telcos and digital markets, then BEREC, the gathering of European regulators of telecommunication, and the CMA, the Competition and Markets Authorities in UK. And I think we can start now the debate, and I think we have quite a few questions in the chat online, and also we have a question. I'm not sure if online on live by Daniele Turra, who is I think present in the room.
Yes. Good morning, everyone. My name is Daniele Turra. I'm one of the youth ambassadors at Internet Society this year. And I actually wanted to thank you everyone for this very extensive presentation on this very important topic. First, I wanted to actually stress a couple of points that I believe must be ensured in order to both avoid consumer rights infringement, competitive injury, but also chances of internet fragmentation, both from a commercial and a user experience point of view. First of all, it's not very clear how exactly ISPs would be able to respect service level agreements and existing contractual obligations towards both commercial businesses and individuals, in particular regarding uptime, packet delivery, and latency, and what kind of effect this kind of measures could have in that regard. But also, if this kind of financing mechanisms are actually to be applied and to be carried out for the building of financing new infrastructures, so the eventual raising prices could actually be seen as a temporary endeavor of some sort. In that case, would connectivity providers allow themselves contractual clauses specifying the eventual lower price after the end of that financing, and agree to refund to consumers any eventual difference net of new operational costs, newly deployed infrastructure, of course. And also, I also wanted to stress that there are so many public funds to achieve this kind of endeavor.
Okay, thank you very much. I didn't hear very well, but I think is anybody want to take this question, and then we can also look more generally to the other questions and other issues.
Maybe I can just briefly comment. I also, I think
Yes.
there were various points that were addressed, but I didn't mention public funding in my introduction. So we do see, of course, public funding playing a role. As per EU policy, public funding is, of course, reserved exclusively to market failure areas. So areas where we don't have a commercial business case otherwise. And European Commission also have been quite publicly saying that at the moment, the split between private investment and public funding is around 95% to 5%. So 5% being the public funding. And that this is also more or less in line with the kind of understanding the way things should be. So of course, we shouldn't be crowding out private investment through public funding, because that also comes with a whole back of different challenges. So I think that, yes, it does play a role, but you know, limited to those areas where we don't have a business case.
Yeah.
I'm not sure there were other points. I don't know if somebody else wants to.
I can actually repeat some, especially I wanted to understand in terms of the respect of contractual obligations and service level agreements, especially on wholesale and retail businesses. Yeah,
so the way that we see this, and I think we've been fairly clear on that, should there be some kind of a fair contribution, I will say the word. We do think that this should, all operators, regardless of size, should benefit. So big ones, small ones, everybody should benefit. We've been fairly clear on that. We are under no illusion that you know, one or two operators should benefit and the others not. And as you say, there is of course a complex network of agreements, etc., between the operators in Europe. We, unlike the US, where they have 3, we have 100 and I don't know how many. So there are all kinds of contractual SLAs, etc. And we do believe that this should be then reflected in the ecosystem. Now, how this, can be done, that's, I guess, for the policymakers to decide. But that's a discussion, of course, that we are open to have.
And also, maybe the last point was regarding the eventual raising prices for consumers, and how exactly that could affect any kind of market share.
Listen, there was an interesting study by the Toulouse School of Economics that looked at the impact on consumers of this kind of a contribution or fee, and actually they concluded that the positive overall welfare, the positive welfare or the welfare impact would be positive for consumers. That over time the prices of content may go up a bit, not all content, but those impacted, but that the price decrease of connectivity services would actually be greater than some price increases somewhere in the ecosystem, so that the overall welfare benefit actually was positive. And there was a whole lot of econometrics in between this conclusion and the introduction. But this is a publicly available study, and I think that it might be interesting for you to have a look at it.
Thank you. Maybe, Antonio, I can add, I can't raise my hand here, so I'll raise my voice. So that, because you also brought in the fragmentation aspect in your intervention, I think it's important to also look at that. What would be potential reactions to a EU-centric regime of financial contribution to be made by service providers? Something to keep in mind while when I did my introduction, I said this is just the packet pushing going on by the carriers. But of course, these days, those carriers are no one-trick ponies anymore. There's, of course, the packet pushing part. And if you take one word with you home this day, the packet pushing should be it, maybe. So the simple commodity, but there's also a wide variety of services. So your usual ISP will also give you some TV streaming, or what we call TV in previous decades, and some other services that sometimes gets preferential treatment. And that leads us to this whole zero rating discussion that we've had, that also was in collision with the open internet regulation or net neutrality guidelines there. So there is also an incentive maybe to push one's own traffic that would not be subject to this contribution, and that needs to be, or would need to be discussed. The other question is, what would the providers do and what would the customers face? And I'm not completely convinced that it is beneficial to the customer only if providers of services would seek to escape the regulatory regime by, say, getting out of the European Union to make traffic take longer routes and introduce latency and decrease quality, or say, decrease quality by using a different resolution when we talk about video streaming or such. This is all discussed. It was made, there are lots of contributions by the technical community to this. The European Council of Consumer Protection Agencies has submitted contribution along these lines to the European Commission consultation. You can read all this in very much detail. That is one aspect. The other aspect is the Korean example that has been discussed a couple of times, where the measurements have shown that what I predicted here, and I didn't predict because I just followed that example, that actually the quality of the internet access when it comes to accessing the services declined after introducing a similar regime in Korea. So there is, of course, two sides to the game, and not all is clear that it will be in favor of the end user.
Thank you, Peter. Verena?
Thanks, Antonio. Yeah, and just to complement what Peter just said, so we did the numbers for Korea. We have a report that we published last July on broadband networks for the future, where basically Korea was a quite fascinating case because Korea is really one of the leaders in the OECD when it comes to good connectivity. So they're number one in fiber penetration. Korea has one of the best 5G coverages in the OECD. So typically, you know, what we're used to see is that Korea is always really on the top of our charts. And, you know, that's what we produce because we like to do evidence-based policymaking. In that report, we looked at the quality of the connections, right? We looked at latency in particular. And what we saw is, you know, that Korea went from being actually the best country, literally like to the very end of the line. So we could actually see, you know, that basically introducing something like a single party pays model, obviously, you know, we didn't show any causality, but that was basically the only change that happened in terms of regulation, that didn't seem to be a very good way forward, let's put it like this. So then obviously, you know, there's the debate whether something similar would happen in Europe. But on a more practical view, like I just want to take a step back. So basically what we do see in Europe is that competition works, that market works, and that actually for us, you know, from a consumer welfare perspective, it's actually a good thing if people don't have to pay over $100 for an internet connection. Which is what we see in other parts of the world. So, you know, like from a macroeconomic perspective, like the developments that we've seen in Europe that are accompanied obviously by the policy and regulatory framework have produced some really good outcomes. And I think, you know, this is what we should all acknowledge, right? So then the next step is to see, you know, is there really an investment challenge on the side of the operators? And if there is, you know, how can we overcome that, right? And some answer I mentioned are public funds, some answer to that are different actors. The proposed way forward, I mean, you know, and there I'm talking, you know, not on behalf of the OECD, but what does seem to be tricky, you know, by what's proposed here is that, like, from a regulatory perspective, you know, like if you're a regulator, you need to determine market failure to justify an intervention. Sorry if this sounds a bit technical now. And if you look at the market at this stage, you know, what I mean, it's obviously the operator that has the termination monopoly. So, like, from a very practical view, I wouldn't know, you know, how you could justify like a market failure here that would require intervention. So basically, so my plea here is like, what is supposed, like we have a lot of questions. We don't know how this could work. Maybe, you know, Ethno has an answer. We did talk to smaller operators. They don't seem to share the same position. So that's also interesting. So we have some European operators that seem to think this is a great idea. Some others told us the opposite. So basically there are a lot of questions surrounding that. So basically, you know, maybe we need to find a different way, you know, to overcome like investment gaps, if any. And what we do see is like, you know, the reason why there are investment gaps differ from country to country, right? Like my country is Germany. So in Germany, you know, for a very long time, you know, used the copper connections that weren't too bad. I mean, but then it was basically a strategic decision by companies whether they wanted to upgrade copper to fiber. So these companies decided for a long time this is not what they wanted to do, right? So in Germany, for example, the challenge you face now is not even so much the money. The challenge now is that everyone realized, okay, this is a huge issue, right? We do have, as was pointed out, we do have coverage issues. We do have quality issues in Germany. So what we're trying, or what is being tried in Germany now is to fix these issues, and this is good. And the government realized, you know, and acknowledged there's a need to do that. But in very practical terms, like the issue in Germany at the moment is not so much the money, but is construction capacity. So actually, there are not enough construction companies that are able to dig up the roads, you know, to lay the fiber. So I think, you know, that topic is quite complex. It is an important topic. We do want to make sure that operators don't go out of the market. Fortunately, we haven't seen that in Europe, and we hope we're not seeing that anytime soon. We didn't, I mean, for so far, we don't have any indication this will happen. But then, you know, we really need to look, you know, on a case-by-case basis on the countries, okay, if there are issues, what are the issues and how can we overcome those?
Okay, thank you very much, Verena. And I pretty much agree that there are a lot of questions here, and the topic could be looked at very different angles. And we hope at least in Europe, the European Commission has performed the consultation, and maybe from that we could derive some answers. Also, for example, as you mentioned at the beginning, which is very true, the different investment that have been done in the ecosystem. I hope also in the consultation, one of the results of the consultation could be the European Commission consultation could be the definition in a way of the remit of the ecosystem and the different investment that different actors are doing, and how much each investment is contributing to the functioning of the ecosystem as a public good. And before giving the floor to Marit to answer, because a lot of questions, I guess, touched also her position. There is a question from the online from Aleksi Suhonen. Maybe he can activate the audio and ask your question.
Yeah, I'm in the room in Tampere, so I'm told online in the room. My name is Aleksi Suhonen. I live here in Tampere. I've worked on the core of the internet in different aspects for a few decades. Right now, I work for an internet exchange point here in Tampere. And I've been observing the local growth of the internet for a long time. And I wanted to contribute some of those findings, basically with the core idea that building the networks is not the sole privilege of 100-year-old telcos. In the early days of the internet in Finland, actually the biggest internet builders were not telcos at all. And later telcos merged and acquired those companies, so that now the biggest three are the oldest telcos in Finland, or the oldest telcos in Finland. But when it comes to rural connectivity, for example, in Finland, there's been government money and other grants available to build fiber networks in rural areas, but the big telcos have been reluctant to use that money. So other initiatives have sprung up to build networks in rural areas. And then when the fiber has been built, those big telcos have been reluctant to provide internet connections over those fibers. So again, other small ISPs have sprung up to provide the internet over those fibers. And now those ISPs are growing quickly. So I don't really see the issue that if big telcos can't or don't want to build networks, somebody else will show up and do it. Anyway. And then the big telcos can just buy those. So I don't see an issue there at all. The internet finds a way.
Okay, thank you very much. I couldn't hear very well the question, but I think from Marit and Peter's expression they did, and so maybe Marit could answer to this question, yeah. And also other point that, and then we have a very quick answer, because I would like to have another last round of all the speakers.
Yeah, very quickly. I mean, okay, I'm not going to comment on every country in Europe is different. They have a different history. We already heard about Germany. We hear from Finland. I have to say I was surprised. I took the train down from Oulu yesterday, and 30% of the journey I only had 3G. I was a little bit surprised in the promised land of 5G. But nevertheless, so I think, there are investment cases and decisions that are taken. I don't have all the background on that. I know in countries like Denmark, the model that you had just raised, that smaller telcos appear and then the big one buys them, is a very, for example, fluent model that apparently happens. So I think there are many different things. One thing I would like to come back to is the regulatory asymmetry, because who is regulated in the European markets the most? It is the big telcos. We have the SMP regime. So there are constraints that are that are bigger than for those smaller telcos in many cases, which probably is justified in terms of competition, etc., or at least used to be. What Peter brought up is the CDNs, and I think that's an interesting one because when we look at the interconnection, I mean, peering and transit traditionally have been the ways to interconnect. And now these CDNs are, of course, coming into Europe, which have all the technical benefits that you described. The issue is that these are proprietary networks, and these companies who are building the CDNs, they use them for their own traffic, but they also, of course, sell capacity for other players to use the CDNs. And the CDNs, they are not regulated. And they are functioning in the very same markets as the telecom networks. So just to point out that it is not, investments happen and don't happen, etc., for various reasons, no doubt. But the regulatory framing, as we have it today, it is very much focused still on, as you say, those 100-year-old telcos. And I think that we need to change something there because the market is moving quicker than regulation. And, then there are questions on how to best do it. And I think that that's then a discussion that we've been, of course, trying to have with our policymakers as well. But maybe I'll stop there to stay brief.
Yeah, thank you very much. Peter, do you want to say a few last words?
Famous last words.
I mean, for this panel, I mean.
Yeah, no, sure. There's one more hand raised in the room here.
Yeah.
Can I? It's David. Can you?
Yeah, this is David Fraucho from the Internet Society. So you just mentioned that every country in Europe is different. So why are you proposing a solution that would be EU-wide with direct impact on how the internet works, as Peter has explained, that would also have a worldwide impact? So if there are issues in certain countries for rural development, let's address those in particular. Does that create a regulatory intervention that Beleg says is not necessary? The OECD doubts it is necessary at all. Why are you bringing this into the debate again?
Yeah. Well, when we look at the European Union, I mean, we talk about the European single market. The reality is that our countries are different in every aspect, and not only in the area of digital or telecommunication, in every aspect. We have a lot of digital regulation, telecom regulation in Europe, for SMPs and otherwise. It is EU-wide because we have chosen to live in the European Union and the countries have chosen to do so. So the most effective way to regulate and also to make sure that we have a similar framing to have, not so many discrepancies is to do it at the EU level. And that is our view. We do recognize that in many aspects, whether we're talking Gigabit Infrastructure Act or access recommendation, there are different views from each country, but it doesn't mean that we don't have an EU level regulation. One thing to do with the global impact is that for us, this is a European discussion. We are only discussing this from the perspective of the European telecommunication market. We have a very specific market structure in Europe, as I already was alluding to before. US, 3 operators, South Korea, Japan, a handful of operators, Europe, 120, or what's the number these days. Very different consequences on investment, very different regulatory framing as well in comparison to the other countries. So I don't think that we're trying to have a global discussion on that. It is a European discussion, and we have to live with our reality, but yeah.
Okay, thank you. Peter, I want to say something, and then I would like to close with Verena, who from the OECD could have a more global and general vision on the point, which is always good.
Yeah, thank you, Antonio. Well, I'm inclined to add another open question that we haven't addressed and that would need to be addressed in a continued discussion, which is who exactly is affected by proposals like contribution by so-called content providers, because what we call content providers is essentially the content transporter. The provider, the originator of the content is often also in Europe. We've had interventions, and I think somebody mentioned it in the Zoom chat, we've had interventions by the European public broadcasters who would be affected by costs to be carried by the so-called content providers, which of course would bill their own customers. And that would in effect also then again affect the end users, because the end users pay the public broadcasters as they pay any private streaming service. So there's lots of different aspects. It sounds a bit like this is a discussion, American content versus European customers, and that reminds me of situations or discussions that we had at least 1.5 decades ago, similar to you need to have certain amount of your local language in music, in the radio or something. That would be a completely different debate, but the real reason behind this, I think, is still not really surfacing, and we need to continue discussion and research in that direction. What are we trying to achieve, actually? And the documented lack of necessity for this, documented by Berek and by others, has already been mentioned, and I'll happily hand it over to Verena for the final remarks then. Thank you.
We cannot hear you. At least I cannot hear you.
No, we can't either.
Can you hear me now?
Yeah.
Okay. All right. So I was saying that actually those were excellent final points. So from our view, I do think, we do agree with, we need to find an answer on how to ensure long-term investment in networks. Whether the current proposal, as Peter put it, is the best one, has to be seen. Maybe we need to be a bit more creative on what we do. And as I mentioned, we're working on this, so we hope, to have a study ready towards the beginning of the next year. I know, the EU might move slightly faster than us, but that's what we're trying to do. Thanks.
Perfect. Thank you very much. I think we ran out of our time, and I think it was a very interesting discussion. Of course, was not. We didn't go to any definite point. It was not our intention anyway. And but I think we will be discussing about this topic for quite a few months, and hopefully the discussion will be, because the discussion has been not in this panel, but very often very much polarized, which is not at the end so constructive and useful to find the balance, to find the solution. And I hope and I think with the next months that would be, there would be a bit more of complementarities in the position emerging, and so we could find a very good solution, a very good outcome of the discussion, and also the policy making. Okay, thank you very much to everybody, to Verena, Marit, and Peter, and for the audience there, and see you next time.
This whole Netflix case of US.
Thank you. Thank you, Antonio.
Thank you.
Thank you.